Welcome. We are back. Late night squad in the late night stream. What's up, everybody? Yeah, tech stocks still crashing. Amazon got wrecked. Meta got wrecked. Google got wrecked. Amazon got wrecked. Snapchat got wrecked. Apple still hanging in there, but a very underwhelming earnings season. Just as it felt like the market was really breaking out technically, we're getting these earnings one after another, just hitting the market. But it's not the end of the world. I'm going to talk about everything going on. We also officially have Elon Musk buying Twitter. I mean, this thing's kind of already been set in stone for a while, it feels like, but officially he let that sink in today or yesterday, if you know what that means, and you know what that means. Classic Elon Musk. And in other news, Jeff Bezos, huge move from him today. He officially was able to land a job at McDonald's. You could see, I found a picture of him, actually. It's in the thumbnail. So big congratulations to him. I know he's been unemployed since I think he stopped being the CEO of Amazon or whatever. So he finally has a new job, which is great. Wishing him the best. We're going to look at Amazon as well, which got crushed after hours. So a lot of different things going on. Make sure to hit the like button if you just joined in. And really, I'm excited to look at a lot of these large caps on the weekly. Meta hasn't been this low since like 2016. I haven't even looked at like Google, Amazon, Microsoft on the weekly. So we're going to spend some time looking at those charts as well. Let's get started with crypto and other markets before stocks though. And Bitcoin, let's see, pulled back a little bit today. And right now, let's go down to the 4 hour. Actually, you're getting a back test. So it broke out. You're retesting this previous resistance. Hopefully you can hold it as support. You are getting a little bit of a bounce at the bottom of this range. This is a very key level that I would like to see it hold. If not, then it's like back down to 18.6K, which unfortunately could be very possible if you break under this support. So I'm just hoping that Bitcoin can continue to hold it. The weekly still looks just as good to me. Still looks like you're setting up for that weekly falling wedge breakout and positive momentum still growing. And here's the crazy thing. Look how low the RSI still is. There is a lot of room here on the RSI. You've not been overbought since April of this year. So a lot of room to run there. We will see what happens. Ethereum pulled back a little bit as well. Nothing really technically changed today for Ethereum. The volume is still very high. These 3 days have really been the highest volume pretty much since June when you made those like multi-year lows. And right now it's pretty much the same thing. So nothing too much to update over there. The 10-year, this is a huge technical change. This demand line, you see that red trend line, that is actually held since the beginning of August. And as of today, you have broken that trend line for the US 10-year. So that's a very big shift. This is the first breakdown in a while. This is also pretty much classic bearish divergence on both the MACD and the RSI. So you're getting a pullback for now. We're just going to call it that. It all started with this shooting star candle up right over here. We talked about that last week. And you're seeing a continuation of the pullback. Crude oil heading higher after back testing the breakout of this falling wedge. If you watched last night's stream, I was saying that this kind of looks like an inverse head and shoulders setting up for crude oil. We haven't looked at XLE, I feel like, in a bit, but we did also identify this inverse head and shoulders looking structure on XLE a couple weeks back, and that's been playing out beautifully after it broke out and even back tested it and got pretty close to resistance and then pulled back today. So this one I would probably draw a trend line like this for XLE. I'm going to delete this previous one. You might have a little bit of a wedge forming now. So kind of flipping from bullish to bearish. You also have some classic bearish divergence developing. Metals, gold, pretty much doing the same thing as yesterday. Honestly, if these two lows at around 1600 can hold, that would be great, because that would set you up for a partial decline within this down sloping channel, which will give you a 70% chance of a breakout if gold can't get above that trend line. Or if it just tests that trend line, you're gonna have a 70% chance of a breakout. And that is a very, very key level for gold, right? We have this area right over here for gold. Let's bring this back. You can see these are lows from 2021, and now you're testing it as resistance. So if it can get back above that, that would be huge. Silver kind of in the middle of nowhere for right now, not much of an update there. The dollar currency index, very textbook stuff. We talked about the breakdown right over here, and then I said it's approaching some support last night on stream, and you are getting a bounce off that support. No divergence on the daily. If we go over to the 4-hour though, you did just get a little bit of a channel breakout, very small channel, but it's more of a wedge actually. You just broke out of that. So the 4-hour tells a different story. You have that breakout. You could even see this this level I just charted over here. It dates back to some highs right there, and then a low from October 4th. So you're back above that. That's probably like the short-term key level. The Hang Seng index is open currently. It is kind of doing nothing, still under that weekly trend line that was held for 24 years but broke 2 weeks ago. So it's kind of in a new area that it hasn't seen in a long time. So those are your other markets. I think the biggest change is the 10-year breaking down, so keep an eye on that. Let's move over to the VIX. I'm going to start off with the weekly chart. The VIX is somewhat, there's a lot of different ways you could draw this, but somewhat back testing this weekly triangle. So I am keeping an eye on this. If we look at the other major triangles the VIX created, it never really back tested it though. It kind of broke out and then just kind of went to the moon, which meant the market kind of crashed. But this time around, you broke out, you failed to break above, which we're going to look at this on the daily, but you failed to break above this resistance. And now you're back testing, but I don't know. It kind of just feels like all of this is just becoming one big range, to be honest, and you're right in the middle of it. So the read on the VIX is a little bit more confusing right now. I think it's been very telling for the last couple of months. And then we talked about the breakdown over here, and since then you've been seeing that relief rally in the market apart from earnings. But you are dropping down into the 200-day moving average. It somewhat respects the 200-day moving average. Over here it didn't really, but over here it kind of held it and bounced off of it a bunch of different times. So you do have that. Let's go down to the 1-hour chart. You're kind of really nowhere right now. I think 25.5 is a bigger support level after that breakdown yesterday. So that's really it for the VIX right now. Let's talk about the indices, which were red. Well, the Russell was green again. This might be like the second or third day this week. I don't remember actually where the SPY and Qs were red, but the Russell closed green. So that's a very big deal. Let's look at the SPY. So we did talk about that not so good looking candle yesterday, and you did follow that up with a bearish engulfing candle, unfortunately. So bearish candle, this is when things start to change a little bit. And again, if you've been watching the last couple of streams, my current position on the SPY and the overall markets is I think we can see a continuation to the upside into the end of the year. But short term, I'm bearish, if that makes sense. We rallied a lot in 2 weeks, and I talked about the lower time frame bearish divergences. I talked about the 1-hour rising wedge. some resistances. So I was saying short term I'm bearish. You know, a pullback is probably likely. That's what we're seeing right now. But I've been saying I don't think we're going to see a very aggressive pullback. A lot of the time this year, we've gotten this same setup, this bear flag looking setup, and we got a very quick drop into new yearly lows. I actually don't think that's going to happen this time around. So I'm looking for this pullback to just be a simple pullback and hopefully continue higher in the next couple of months. Don't even ask me questions about next year. I have no idea, but I'm not worried about this pullback too much. I actually kind of, sounds weird, but I might even want it because I kind of want to put out some more swings. There's a lot of interesting looking charts, especially mid caps, but I want to wait to see if we can pull back a little bit more before putting more swings out, because there is always a chance that this happens. You know, it's always possible. You got the classic bearish divergence, you break down from the wedge, and then this is still possible. I just don't feel like it's the same type of bear flag we've seen all year. You could really see the strength in this candle with the volume. That looks like a very definitive low to me. It reminds me of February. Let's go back over here. It reminds me of right over here. Right there, February. This was around when Russia invaded Ukraine. We had a huge gap down, and the same day we saw an insane rally intraday. The same thing happened over here. I think that was around, was that around a CPI report, if I'm not mistaken? I'm not too sure, but yeah, short term on the SPY, you did break down from that channel. Now you're pulling back. But if we go down to lower time frames, this is a very interesting setup going into tomorrow. Futures are currently a little bit red, but tomorrow there is this kind of flag setup occurring. You have some hidden bullish divergence on the 30-minute, and you have this bull flag developing. So I will be keeping an eye on this tomorrow to see if it can break out. You could probably try the same thing on the 15-minute. So you have 30-minute hidden bullish divergence, 15-minute classic bullish divergence heading into tomorrow. And you even have this support zone where you can see a couple of these highs over here and this low around 378. So as long as 378 holds tomorrow, I will be hoping, there's no way to know until it happens, but I'll be hoping for a breakout of this wedge, and I will be watching it. I don't know if we're going to run out of time, if we have a dry day at some point, if we draw a few dry hours at some point tomorrow, but if we don't and we break out, that could be a nice move. And if you watched last night's stream, I was talking about this 381 level. Very choppy. You broke down from it, you went back above it, you broke down from it again. It didn't really get respected as I thought it would. You had really just not a lot of volume apart from this rally over here, which ended up turning into a bear flag. There were some setups today. There was this wedge setup first. It also showed up on the Qs, and then after you created that, you kind of bear flagged into the VWAP on both the SPY and the Qs, and then you just sold off. But I feel like it was more of a wedge type of day than it was a support resistance type of day. You had some wedges playing out, but you really weren't respecting a lot of the levels. I mean, I guess this 379.5 level, I had this charted last night on stream. That was respected twice as your low of day. So there was that, but then after hours, you can see that was severely broken all the way down to 374 on the SPY after hours, around 4:30 ET with the Amazon and Apple earnings. So very hectic, that's for sure. Let's move on to the Qs, which are kind of obviously going to be more affected by tech, as it's a tech-focused index, and this is the key thing I'm looking at. I talked about this, I think 2 nights ago on the stream, when I was saying I am flipping back to bullish, but potentially look for this back test. You're getting that right now. You probably are a little bit lower after hours because of the earnings and stuff. But again, if that same wedge / flag pattern develops on the Qs like it kind of is on the SPY tomorrow, you have that same hidden bullish divergence on the 30-minute. All of this can take place on the lower time frames while you're back testing on the daily. So I really think as long as this 269.40 level holds, we're now pretty much past the bulk of major tech earnings. You might maybe see a little bit of relief. And then just thinking about it fundamentally, there might be some dead cat bounces. I don't know on which particular names, but we've seen so many major tech stocks drop more than 10% after earnings this week. Maybe some of them bounce, and when you get that, you can maybe get this back test bounce off the Qs. So in general, I'm hoping for a bounce off this area, somewhere in this zone. I don't really know how we're going to open tomorrow, but somewhere in this zone, I'm looking for the bounce. If we can't hold that zone, that's when I might have to flip back to, okay, your next level is the low of the year. But if this is the area around like 269 that I want to stay above on the Qs, and if you can do that, that could be pretty big. Because you're now past the earnings too. So despite all of these stocks really getting hit, let's see the percent change. You've dropped about 4% from the high you put in, but you remember off the lows we put in 2 weeks ago, that was a 12% move. So you've only really dropped down a third of the way with horrible tech earnings. It could be a lot worse than this. I'm just looking at it in a different perspective. But even apart from tech, small caps, flat day today. It did have a shooting, Russell 2000 did have a shooting star candle yesterday. Let's see. Not technically a bearish engulfing today. You did close just high or slightly high enough to not have a textbook bearish engulfing, but it is close to one to be fair. Let's go down to the 1 hour. You're kind of just creating a range here with support at 178.5. It was resistance here. It's flipping into support. And then resistance around 182. So it's just like a short-term range. Very sideways day for small caps. Yeah, let's look at the ARK ETF finally before we move on to some individual stocks. Good morning, and then not a great afternoon, but you're out of the wedge. You've already bounced multiple times. Again, like, even if it does pull back, like, I still think there's not a lot of technical damage. This doesn't really look much like a bear flag to me, at least on the daily. On lower time frames, it might. But these are very well-defined lows multiple times this year. I look at this pullback, at least for now, as more of an opportunity than anything else. I don't really see this as a start of a new major leg down in the market, at least short-term. You know, this is always possible. I know I'm drawing a lot of different speculative lines tonight, but something like this is always possible too. Like, I'm just saying for right now, it looks like there's been a lot of good technical changes over the past couple of weeks, despite the not so good earnings. And now we're going to see mid cap and small cap earnings in the next couple of weeks as well. So keep an eye out on how the ARK ETF and the Russell 2000 react to those. All right, so that's my thoughts on the overall market. Pretty simple. Let's look at Twitter. Is it getting delisted tomorrow? Is that what I heard? Let's see. So Elon Musk completed a $44 billion acquisition of Twitter. Let's see what else is here. Thursday evening. Yeah, so there were like, I think a few different Twitter executives that were fired, and I think even one of them got escorted out. One of the fired execs was escorted from the office. So it's really happening. This is something we've been talking about, I feel like, for a very long time now. Twitter is now Elon Musk's platform. It feels very strange. Like, it's not anything new, but just the fact that, like, it's like, just to think about, like, going on Twitter today just felt different. It just really felt different. But yeah, we did talk about this bullish pennant not too long ago. That's kind of been playing out. We even talked about that $52 breakout. 54.57 is the next resistance I see. Honestly, I don't really know how much it matters for me to be charting this right now. But huge move off the lows at literally 43 last Friday until where it is right now. And Amazon, on the flip side, just like Jeff Bezos is flipping burgers currently, got crushed. Let's go down to the 4-hour chart. Boom. Huge, huge, huge drop, all the way down to $88 after hours. The last time Amazon was at 88 was the COVID crash. So let's go over to the weekly chart now. Take a look at this. So Amazon at the lows was at 88. It's a little bit higher right now, but you're pretty much back to this pre-COVID price point that you were spending until you broke out of it after the COVID crash. So all of this was kind of erased. And looking at the weekly, shoot, this looks like one huge inverted cup and handle, to be honest. And you're literally testing your breakdown right now because you're in this zone now. So I think under 100 is where it gets scary, because you can see $100 resistance over here. Of course, this was pre-split. Resistance over here, and then support so far this year, but now you've broken that. So staying under that level, your next support, like major support on the weekly, is like your lower 80s, which is your COVID crash low. So that is where we're currently at. And yeah, it's really one textbook huge inverted cup and handle, really. scary stuff kind of, but I don't know. You know, there's a lot of fundamental arguments, I guess, that could be made. I don't keep up too much with it. The bat kind of made at least a type 1 move before the earnings. It hit the D point, it went up to almost the B point, and now it's obviously dumped, but it was a nice little pre-earnings move, I guess. And then Apple also reported today, it's right over here. This was a premium swing I alerted a couple weeks back. It already hit the first target before the earnings today, and it's already been pulling back this week. You did see a pretty sharp decline down to 136 after hours, and then you went to close after hours at 145, so there were some buyers later on in the evening. And yeah, I mean, let's see, it's 145.35, so it's actually higher than it closed. So just looking at Apple's technicals right now, it seems like you were kind of testing a breakdown of this bear flag. You have some hidden bearish divergence, so not great. But the larger picture is the bullish Gartley, the double bottom, and holding this $140 support level. So as long as Apple continues to hold really 138, not 140, if it continues to hold 138, I think that's the major level. Just like we looked at it on Amazon, let's go over to the weekly. You can see this is the key level for Apple. As long as it can hold above it, it's in a whole entire different universe compared to Microsoft, Amazon, Google, Meta from a technical standpoint. Just look at from the COVID crash lows to where it's currently at. Apple is only sitting at a 382 retrace. Most other tech stocks, most other stocks in general have broken that point. So Apple really is just kind of leading overall right now. And I said I want to look at some others. So yeah, on the weekly, we had some other stocks report earnings this week. Microsoft's getting close to the lows of the year. This looks very similar, just like to the SPY or the Qs, honestly, but it is kind of one big wedge. But if you do close like this, which probably you will close somewhat like this, I mean, you might rally a little bit, I don't know, but you're probably going to close this week with a bearish engulfing candle on Microsoft on the weekly. If we go over to Google, same thing. You're probably going to close with a bearish engulfing candle. Very similar looking long-term wedge developing over here. But, you know, we are getting these wedges on the weekly. They're not close to breaking out, though. And then we could see Meta, which is really down there. This, you know, it's just kind of like a falling knife for right now. So I think really most of the focus when looking at Meta right now should solely be fundamental. There's not much you can really do from a technical standpoint. Sure, it's kind of testing the demand line of this wedge, but I think really just where it's at currently, there's nothing major over here that's bullish or bearish. It's just, what do you think about Meta where it currently is in terms of price compared to what they're fundamentally showing? That's really what it is. So those are some tech stocks. Let's look at the swings now. Tesla was flat today. The swing is still in profit. It did, yet again, it did the same thing yesterday, but Tesla tried to break out of this. We've been talking about this all week, this 1 hour descending broadening wedge. Had a big fake out candle in the morning. First hour of the day, it was above it. It looked like it was going for it. There was even this gap to fill above it, like 238. And then you just kind of came back down into this resistance zone. So finding a lot of resistance in the mid 220 level for Tesla this week. If that can break, I really do think there's not a lot of resistance for a while. So it's really, can it break above this resistance? That's the big question as of right now. Just a flat day, good morning. Nothing much apart from that. AMC, bearish engulfing candle today, unfortunately. It was really close to that first target. It is still in profit. The AMC swing is still up 8% since I alerted it. It's back testing the 650 support level. That's really the big support. So hopefully you can hold it, but this 1 hour bear flag I drew yesterday on the stream is kind of breaking down, unfortunately. So I don't know. It was very, very close to being a winning swing. The worst case scenario now is it's going to be a break even. Hopefully not, but at least it can't be a losing swing. And then CLOV today, we talked about the shooting star candle yesterday. That was followed up with a bearish engulfing candle. Another example, and we saw this on... did we see this on one of the indices? The SPY kind of. We saw the same formation on the SPY. An example of this like shooting star followed by a bearish engulfing, and this one's a little bit different, but an example of a shooting star followed by a bearish engulfing candle that reversed the trend. The downside is the US 10-year. We were just talking about this. Now the bearish engulfing candle on CLOV came literally like right over here, the candle after the shooting star. But you can see like this textbook reversal pattern is unfortunately on CLOV right now. However, on the US 10-year, you got this at like the top of a trend while being completely overbought and having classic bearish divergence. CLOV is at like the bottom of its current trend. Of course, a new bottom is always possible, but hopefully not. So it is a very different like circumstance. Like usually you're going to be looking for shooting star candles like after something's already rallying for some time. But right now, as long as it can just hold these two hammer lows around 137 and stay out of this channel, it's not the end of the world, but you know, you're going to want something more than just that and not bearish candles. And then finally, Fisker was flat today. It's still kind of back testing this wedge breakout if you have it drawn how I have it drawn, but getting above 8 is going to be the bigger hope over the next couple of weeks. It says earnings are on the 2nd of November, so in about 5-6 days. Earnings coming up soon. We'll see what happens. Hopefully it can hold it. Alright, so hit the like button if you didn't already. Hit the subscribe button if you're new to the stream. That's pretty much the rundown. I will do some ticker requests in a second here. If you want to drop tickers in the chat, go for it. Final reminder, because this is I think this is the last time. No, I'll stream on Tuesday probably. So I'll remind you again on Tuesday night, which will be the final day of the sale. But you haven't from now until Tuesday night to sign up for premium if you want to take advantage of the sale. It's like the 3rd sale this year, so I don't do them too much, but it's almost 50% off compared to monthly if you sign up for annual right now. If you're going to do monthly for a year, that's $583. If you want to join premium with the coupon code October 2022, it's $303. So that's 48% cheaper than staying under monthly for a year if you sign up before November, basically. Or by November 1st. On November 1st, next Tuesday, I'll end it after the stream. So, and then also if you just want to try it out for your first month, if you're not ready to, you know, join for a year, you can still get 10% off your first month using code October22. The codes are a little bit different, so make sure you keep that in mind when you're checking out. But yeah, the sale is taking place right now. And let me take a look at the chat. So, seeing some stuff about Amazon and Apple. Maxime says, anyone see Musk walk into Twitter offices with the kitchen sink? Yeah, I was making a reference to that earlier in the stream. And yeah, so that's really what's going on with the market right now. I wasn't going to stream tonight, but I ate my dinner quickly and I said, might as well. So hopefully you enjoyed the updates on everything. Not seeing any ticker requests for tonight, so quick half an hour update stream should do it, right? Maybe, I don't know. Hopefully. So I hope you all have a good weekend. Hit the like button. If you're not in the Discord, it's free. The link is in the description. Make sure you join the Discord. If you don't want to join premium, there's always that. And, well, premium's in the Discord too, so you have to. If you're joining premium, you're in the Discord too. But sorry, it's been a long day. All right, I'm gonna get out of here. Hopefully you enjoyed the stream. Hit the like button if you did not already, and I'll see you all next week on the streams. Have a good weekend and peace out.